April 15, 2026, crypto is out here beating gold and stocks during an actual war, and today's show is absolutely stacked. Quick word from the sponsor. Compete Token, the gaming crypto that actually has real games. Link in the description. Bitcoin just repriced itself in front of the entire world. Since US and Israeli airstrikes began in February, Bitcoin is up 12% while the S&P 500 is down 1% and gold has fallen 10%. Iran is literally demanding Bitcoin tolls at the Strait of Hormuz, collecting roughly $20 million per day. Bitwise CIO Matt Hougan says Bitcoin is no longer just digital gold, it's now being priced as a neutral settlement layer in a world where financial rails get weaponized. If that framing holds, Bitcoin's total addressable market is way bigger than gold's $38 trillion cap. The asset that was supposed to collapse during a geopolitical crisis just became the safe haven. Old man gold is shaking. Not all crypto is performing like Bitcoin today. The Trump family's World Liberty Financial just proposed unlocking 62 billion tokens under a 4 to 5 year vesting schedule, right after borrowing 75 million in stablecoins against their own governance tokens last week. The token is already down 65% to about 8 cents, and investors are now learning they'll be waiting years to see their full stake. Justin Sun called the whole thing tyranny and an exercise of power by the selected few. Investors in the governance forum are furious. One straight up threatened legal action. You paid up to 5 cents per token, it's now 8 cents, 80% is still locked, and insiders want 5 more years to vest. That's not a crypto project, that's a timeshare pitch. Let's get to the institutional wins. Legal and General Asset Management, managing over £1.2 trillion in assets, just put $68 billion in liquidity funds on-chain via Callistone's tokenized network, launching on Ethereum with same-day settlement in dollars, euros, and pounds. This is one of the UK's oldest, most boring, most respected asset managers saying, put it on Ethereum. Tokenized money market funds are now over $13 billion industry-wide, and that number is accelerating fast. When trillion-pound asset managers start putting flagship funds on-chain, the blockchain has no real use case crowd officially runs out of arguments. About time. And it's not just Europe. Pakistan just lifted its 8-year crypto banking ban, opening the world's 5th most populous country, 240 million people, to crypto banking for the first time since 2018. Banks can now serve registered crypto firms under the country's brand new Virtual Assets Act. Pakistan signed agreements with World Liberty Financial and Binance, and the country is looking at tokenizing $2 billion in national assets. A central bank formally reversing a decade-old ban. That's not hype, that's infrastructure being built. 240 million people just got access. Massive. In Ethereum news, BitMine posted a $3.8 billion quarterly loss, almost entirely from unrealized Ethereum losses, and then immediately turned around and bought 71,000 more Ethereum. Chairman Tom Lee flew to Paris Blockchain Week and declared the mini crypto winter is over, targeting Ethereum above $60,000. Ethereum is trading around 2,300 right now, so 60,000 is roughly a 26 times move from here. Tom Lee is calling that shot while sitting on nearly $4 billion in paper losses. Is that insane conviction or insane stubbornness? At this point, it might genuinely be both, but respect the audacity. More institutional accumulation to report. Tether quietly added another $70 million in Bitcoin to its reserves, bringing holdings to over 97,000 Bitcoin, worth about $7.16 billion. That makes Tether the second largest corporate Bitcoin holder on the planet, right behind Strategy. Tether made over $10 billion in profit last year and has been allocating up to 15% of those profits into Bitcoin every quarter since 2023. The company that skeptics called a ticking time bomb for a decade is now one of the biggest Bitcoin stackers in the world. The haters have been wrong every year. Tether just keeps stacking and smiling. Meanwhile, Bitcoin developers are having a serious debate. A new proposal called BIP 361 would freeze 5.6 million Bitcoin sitting in quantum vulnerable legacy addresses, giving holders 5 years to migrate before losing access to their coins. Co-author Jameson Lopp put it plainly, I don't like it myself. I wrote it because I like the alternative even less. Critics are already calling it confiscation, warning it turns not your keys, not your coins into your keys, but we froze them anyway, and sets a precedent for future protocol level freezes. The proposal is still a draft with no activation timeline, but the debate itself is one of the most important Bitcoin has ever had. If quantum computers arrive before a fix does, there is no undo button. Back to Ethereum. The Ethereum to Bitcoin ratio just hit a 10-week high, breaking through a descending trendline that has been capping Ethereum since August 2025. The SEC quietly dropped guidance saying decentralized finance front-ends can operate without broker-dealer registration, and institutional demand started moving right after. BitMine now holds 4.87 million Ethereum, over 4% of total circulating supply. Open interest on Binance jumped over 10% in a single day, with funding rates turning positive, meaning longs are taking over. The shorts are stacking up against a wall of institutional buyers that usually ends one way. In acquisition news, eToro just bought Zengo, a self-custody crypto wallet with over 2 million users, for $70 million, combining eToro's 40 million registered users with Zengo's keyless wallet tech. The goal is to push deep into decentralized finance, prediction markets, perpetuals, the full self-custody stack. Zengo raised just $24 million total before selling for $70 million, a great outcome for a team that built real infrastructure. eToro shares are up over 6% on the day. Every major centralized platform is realizing it needs self-custody or it will lose its most engaged users to wallets that actually offer it. And finally, Bitwise just launched a spot Avalanche exchange-traded product on the New York Stock Exchange with staking built in, putting about 70% of holdings to work for roughly 5.4% annual yield. It closed up 1.5% on its very first day of trading. VanEck also filed with the SEC last week for their own Avalanche ETF. The blockchain used by FIFA, Toyota, BlackRock, and Wyoming's state-level stablecoin program now has two institutional products racing to market simultaneously. Layer 1 competition is officially back, and Avalanche just reminded everyone it is still very much in the fight. One more time, Compete Token, the gaming crypto that actually has real games. Link in the description. That's your crypto pulse for April 15th. Stay sharp, stay stacking.